Hola, konnichiwa for my friend Darlene Carter, and hello for our English-speaking audience. Hello, it's Matt Green, and this is your 5-minute market update. It is the first week of August 2017. We now have market data through the end of June that we'll be reviewing today. And just when I think that this market might be slowing down, there's a lot of data that would suggest otherwise. So let's jump into it. Okay, so when we look at the market, I really like to start out with three main categories to give us a sense for what's going on and what we might expect going forward in the future. The first one's new listings, pending sales, and closed sales. So let's just take a look and compare these numbers to what we saw the previous year in June, and then also kind of where we were at month to date or year to date last May when we did this. So when we look at, first of all, June over June from the previous year, 2016 to 2017, we actually saw a really significant increase, 4.8% in number of listings taken. This is actually probably really good because we have had a significant shortage in listings. And so for us to have more listings on the market will actually potentially help us slow down the rate at which prices are raising. Now, if we look at where we were at year to date through the end of May, we were down 5.3%. Showing that there were fewer and fewer listings on the market. We've made up serious ground in June with that increase in listings, and we're down now only 2.9% year to date. So pending sales, kind of a similar story, 4.6% up year over year for the month of June. Now, when we look at year to date numbers, through the end of May, we were down 2.8%. And now through the end of June, we're only down 1.5%. Again, I think this is a good thing. Closed transactions. So closed transactions, we did not see as many in June, probably a function of us not having as many listings. We were down 3.8% year over year in the same month of June. Now, when we look at where we were at May to June, pretty flat, 0.8% down through May. June through the end of June, year to date, down 1%. Again, I think largely a function of number of available listings. All right, so let's look at this. I thought this was pretty interesting. Pending sales. This is from 2006 down here, clear to 2017. And you can see pending sales in any given month. Very, very significant month for 2017, but it did not keep pace with what we saw in 2016. So a potential slowing in the market, or a function of not having the listing inventory that we need to keep up with demand. Based on the price increases we're seeing, likely a shortage of inventory, and we're seeing the prices escalate significantly because of that. Days on market, real significant little measurement for us to see how quickly things are selling. Days on market right now, the lowest we've seen historically, clear back from 2006 when the market was just crazy, crazy hot in 2006 and 2007. Fewer days on market right now. The price range that tended to sell the quickest was the 150,000 to 200,000 range at 32 days. The price range that tended to sell the slowest was over 750,000 and above. And that was about 111 days. So if you have a higher price home, you're probably not going to see those 32-day sell cycle, but the average for over 750,000, 111 days. All right, let's jump to median sales price. This is pretty incredible. Year over year, we continue to see just exceptional appreciation of prices. The 12-month average here, 8.4% year over year. This is statewide data again for single-family residences. Really interesting to look at this data. 2006, we saw the prices really run up in 07 and 08. We saw it retreat in what we call the Great Recession, right? And then ever since 2011, 2012, we've just seen this really steady climb of values here in the state of Utah. All right, let's go to percent of original list price received. So this is what the home actually sold for in relationship to the original list price when you first came on the market. And we can't stress enough how important it is that you price a home appropriately right out of the gate. There's a lot of really good arguments and data to say how it impacts your home positively if you do that, and conversely, very negatively if you overprice it out of the gate. creates a lot of stigmatism or stigma and belief that the home might be overpriced or that something's wrong with it, right? So when we look at year-to-date data, 98.1%, that means the home sold for 98.1% of the original list price. So if you're a buyer, be prepared in this market to write an offer close to asking price in most scenarios. Okay, so let's jump to housing affordability. This is a really interesting one, and I think there's a lot of misconceptions relative to affordability. There's really three main factors that impact affordability: jobs, what the cost of money is, interest rates, right, and the value of real estate, what the cost of the home is. And if we look at affordability, the higher the number, the more affordable homes are. The lower the number, the less affordable. So this trend here, 138 to 119 over the last 3 years, shows that homes are becoming less affordable. And we would assume that with prices going up. Interest rates remain really aggressive though, very, very low. So they're very attractive and continue to help us keep properties more affordable. And look at this historically. We're still far more affordable than what the homes or what it costs someone to buy a home back in 2007, 2008. Even though home prices are more than what they were at that time. The affordability is actually, it's more affordable today. All right, let's jump to our next slide here. Inventory of homes for sale. As I had indicated before, there's a real shortage of inventory. And when there is, we see that supply and demand issue, low supply, high demand. We continue to see high demand. So there's a lot of upward pressure on prices, and we're seeing those prices continue to raise at nearly a 10% clip year over year, as you saw earlier, about 8%, 8.1% currently over the last 12 months. And again, pretty amazing, from 2006, we actually have lower inventory, significantly lower inventory than we saw in 2006. All right, month supply. Month supply is simply a function of, based on the current rate of sales, how long would it take us to sell through the existing inventory? It's a function that a lot of economists use to measure a market and distinguish a buyer's market and a seller's market. And here we can see we're very much in a seller's market. Seller tends to have the upward hand in the negotiating effort because there's so few things for the buyers to choose from. And we have our lowest months of supply this past year than we've seen maybe ever in the state of Utah, certainly in the last 11 years. So just a handful of months of supply, pretty incredible. Okay, so I thought it'd be interesting to just take a quick look at some of the counties and how they're comparing to the state average. So when we look at median sales price, the entire state is up year to date 8.6%. When we look at Davis County is up 9.3%. Salt Lake County is up 11.2%. Now this again is the median sales price. If we look at Summit County is up 5.5%. Utah County is up 6%. And then Washington County, St. George area, up 10.3%. And Weber County is up 10.4%. So kind of interesting to see what's going on. Okay, so let's end with just a quick comparison about how our brokerage is doing in relationship to the marketplace. You've heard the saying that all boats rise with the tide. Well, certainly that is the case and should be the case. Our company should at least be matching the industry. But if we're really executing at a very high professional level, we should be outpacing the market. And in fact, we are doing that. So if we look at the June data in the state of Utah, the total marketplace, and compare that against Keller Williams data over that same time period, this is how we're faring. So let's start with new listings. New listings, you can see here, the state of Utah is down 2.9%, while Keller Williams Utah is up 14.9%. We're outpacing the marketplace by 17.8% in our ability to go out and get listings and make more inventory available for buyers. Pending sales, so under transactions that go under contract, the state of Utah is down year over year, down 1.5%, while Keller Williams Utah across the state is up 9.4%. We're outpacing the market by 10.9%. Awesome. Closed transactions, state of Utah year to date down 1%, while Keller Williams Utah is up 9.3%. We're outpacing the state by 10.3% in closed transactions. Hey, thanks for joining me for our 5-minute market update today. I hope you found some value in it and better insight in the market. Again, if you have any thoughts about what's going on in your particular area and would love to share those below, we'd love to continue the discussion in the comments. And please give us a thumbs up and share this with your friends and family. And we look forward to talking with you soon.